Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, June 18th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. My name is Rodney Constable. I'm the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary stock market risk management and trend direction model. Now, we will come back to this chart in just a few minutes, but I want to go to a weekly chart of the S&P 500 to kind of get a big picture view of what has been going on and how the S&P 500 did this week. This is a weekly chart of the S&P 500 that goes back to the 1st of 2021. So we're just focusing on calendar year 2021 in this chart. And over here on the right where my cursor is moving, that is this week's candle. And the S&P 500 was down 1.91% this week, and we closed at 4166.45. This blue line is set at 4220. And the green line, that is the 10-week moving average. And the orange line, that is the 40-week moving average. It's obvious that we closed below the 4220 level as well as the 10-week moving average. This was the first weekly close below the 10-week moving average since back in February right here. So definitely saw some weakness this week. It's hard to say whether that's going to carry into next week or not just yet. A couple of things to keep in mind here. We've only had 3 weekly closes above 4220 in the history of the S&P 500. We had one right here during the first week in May, and then the previous 2 weeks prior to this week, the previous 2 weeks we did close above this 4220 level, and of course this week down 1.91%. That's not a catastrophic week, guys, and keep in mind that today was also options expiration, and there was 3 different types of options that expired today on Friday the 18th. So all of that contributed to, and plus on some other things that we'll touch on in the next chart, but all of that contributed to the decline that we saw this week. Now, also, before I forget, if you are a Simple Market Signals subscriber, I sent you several emails today, one of which included a very in-depth market analysis video that I did for you guys. It was over 45 minutes long. It's one of the most in-depth market analysis videos I've ever done, and that is for subscribers only. So if you are a subscriber to Simple Market Signals, please check your email inbox for that link to that video. That video, of course, will not be on YouTube. If you're not yet a subscriber to Simple Market Signals, stay with me to the end of the video, and I'll show you how to get access to that 45-plus minute in-depth market analysis video that I did this just today, and it is extremely valuable, guys. So you'll want to get your hands on that. So stick with me to the end of the video, and I'll show you how to get access to that. Now let's move over to the hourly chart of the S&P 500. And this is just for the month of June. Each candlestick on this chart does represent 1 hour of trading. The blue lines are 4180. That's the lower blue line here. The top line 4220. And again, that's the same line that we saw right here, right? The 4220. But now we're looking at it in an hourly, in an hourly chart. So up till today, the lows for the month of June were set on June 3rd back here at 4167.93. All right, and then we had climbed our way out of that and had hit an all-time intraday high on Tuesday morning. So just 4 days ago, we hit an intraday high on the S&P 500 at 4257.16 right here. And then on Wednesday, and we had a little weakness obviously on Tuesday, but what really kind of set the market off this week was the Fed comments on Wednesday at 2 p.m. on the 16th. Now, guys, I'm not going to go into a lot of detail here, but the market did not like that commentary that came out of the FOMC minutes, the release on at 2 p.m. on Wednesday, and you can see the market had a quick sell-off, but we did get back above this 4220 level on a daily basis and closed above it on Wednesday and then Thursday again. But obviously today with triple witching, options expiration, and just the weakness because of the Fed commentary, Well, you can see here on Friday, today, the 18th, we had this gap down, and then we undercut this 4180 level. And by the way, if you really want to know the importance of 4180 and 4220, you can go back over some of the videos on my YouTube channel from this last month or so, where I talk in depth about these two support levels and why they are so important. We're not going to get too much into that today, but it looked up until really the last hour of trading, it looked like we might be able to close above 4180, but unfortunately, during that last hour of trading, the market went lower and we closed really close to the lows of the day. The lows of the day were 4164.40, which undercut by just a few points the lows that we had set on the 3rd of June. And then we closed just a couple of points higher, 4166.45. So this was the lowest close that we've seen during the month of June so far. Again, the fact that it was options expiration, I think, contributed to the volatility. We will, of course, need to watch and see next week what's going to happen. So, if we can get back above 4180 Monday or Tuesday of next week, we might be all right, at least for a little while. But for right now, it was a little ugly this week, and we did have 4 straight days of selling. Tuesday, Wednesday, Thursday, and Friday of this week were all negative, and we haven't seen 4 days of selling in the S&P 500 for quite a while. So definitely an ugly week, but we'll just have to see next week if we get follow through on this and more selling, or if this, at least for the short term, is as bad as it gets. Now, in the meantime, if you want to get your hands on, if you're not yet a subscriber, guys, I do a ton for my subscribers. I provide a lot of value. So if you're a financial advisor, if you're a hedge fund manager, if you're an RIA, if you work in financial services in any way, shape, or form, this is going to help you out, guys. It's going to save you so much time, because I do a ton of technical analysis work in my newsletters every week over and above the proprietary information that I provide. So I do have a proprietary model that is a trend direction and risk management model. It is proprietary. It's something that took me over 20 years to develop. So that's in there. You'll get the weekly signals as well as traditional technical analysis. And if you want access or you want to find out more about what I do, go to simplemarketsignals.com. That's the website here. And then scroll down and watch this video, okay? It's a little over 15 minutes long. This is basically the presentation, if you will, of Simple Market Signals. So if you want to find out more about Simple Market Signals itself, the newsletter, what I provide there, here's a spoiler alert, guys. It's less than 67 cents a day, okay? It's $19.95 a month. So if you're in financial services, there is no way that this isn't going to save you a bunch of time, because I'm going to do, I aggregate a ton of information into one spot for you. Information you guys need, yield curve information, technical analysis, information on sectors, as well as and over and above my Simple Market Signals proprietary model signals. So guys, at least do yourself a favor. If you're a financial advisor, especially an independent financial advisor, an RIA, a money manager of any sort, or if you're an individual investor that runs any of your own money, including in your 401k, your IRA, or your trading account, please do yourself a favor here and watch this video, all right? And if you need even more clarification on the fact that I'm the real deal, go over to my YouTube channel, the Rodney E. Constable Stock Market channel, and there's hundreds of videos, right? Hundreds of videos that you guys can go through here, okay? If you need even more proof that I'm the real deal, all right? So hundreds of videos for you guys to look at if you so desire, but at the very least, go out to simplemarketsignals.com, scroll down, watch this video, and make up your own mind. But if you want access to that 45-plus minute video that I did today, it's basically a one-time offer, because the link to that video is only going to be in the newsletter that goes out on Saturday the 19th, okay? So if you subscribe anywhere during this next week, you will get access to that newsletter. I will send you the latest newsletter when you subscribe. But if you want one of the most in-depth and current market analysis videos I have ever done, I produced it today during the middle of the day on 6/18, and it is a subscriber-only video. It is not on YouTube, and the link to that will be provided 2 subscribers in the newsletter that goes out this weekend. So go out there and subscribe. It's pretty easy, but if you want to know, how to do that, watch this video. And bottom line is, guys, you just click this button right here to get started, right? And of course, you have to accept the cookies. But watch the video and then go from there. I look forward to working with you. Happy Father's Day, everybody, and I'll talk to you soon.